Today's number is 81.62 billion. That is Nvidia's revenue in dollars in one quarter in just 90 days, the largest quarter any semiconductor company has ever recorded. And Nvidia just broke its own record from last quarter. The data center segment alone, the chips that train ChatGPT, Claude, Gemini, Copilot, every model you've ever heard of, came in at $75.2 billion all by itself, nearly double what it did a year ago. To read all that back, the data center segment, one line on the income statement, almost doubled in 12 months from a base that was already the biggest in the industry. Hang on to that number for a moment. We'll get to it here momentarily. I'm Don Michalik, and this is your Morning Intelligence for Thursday, May 21st, 2026. In the lead, we have Nvidia's print, $81.6 billion, $75 billion of that in data centers. The Q2 guide came in just above what the street was expecting. Jensen Huang said, quote, agentic AI has arrived. The stock wobbled briefly after hours, then steadied, and the record stands. In the rundown, Intuit cut 17% of its workforce, 3,000 people, to pivot to AI. SpaceX files paperwork for a $2 trillion IPO, and Meta's 8,000 layoff emails landed yesterday morning. Paired with a bank CEO in London who said the quiet part into a microphone that no one was expecting. In the deep cut, a new study put 4 AI chatbots through more than 3,000 questions. On election-related questions, they failed 90% of the time. Your AI is getting smarter at almost everything except the part that decides who actually should run the country. And we close with Jeff Bezos on CNBC saying, and I'm quoting here, you shouldn't worry about the AI bubble. Wonder why he's saying that. Let's go ahead and get into it. All right, for our lead story, this happened yesterday after the bell. Nvidia dropped Q1 fiscal earnings for 2027. You heard the headline at the top of the show, $81.6 billion in revenue, 75 of that coming in data centers alone. Here's the rest of the print, and here's why this is the actual story. That 81.6 is the 3% beat on the $79.18 billion Wall Street was expecting. So the headline number was almost known to be the record. What the street did not know until yesterday at close was just by how much. Non-GAAP earnings per share, $1.87. The street had $1.77. And the guide here, Q2 fiscal 2027, 89 to 93 billion in revenue. Consensus was 87.3. So it beat and it raised. Nvidia also boosted its quarterly dividend to 25 cents a share. Then Jensen Huang got on the earnings call. He called it, quote, the extraordinary quarter. And then he said, quote, agentic AI has arrived, end quote. To read that back, the CEO of Nvidia said agentic AI, the version where AI does the work, not just the talking, is here on an earnings call with $75 billion of data center revenue to back them up. 2 more things to flag from the call. 1, the stock did fall about 2% in after-hours trading right after the print, which sounds dramatic, but the time European markets opened this morning, Nvidia had already steadied. The wobble was overnight. The record is still intact. 2, Q2 guidance was the actual headline for the institutional crowd. 89 to 93 billion is a much bigger acceleration than the catalyst had penciled in from an analyst standpoint. That guide is what kept the after-hours dip rather shallow. At least that's what a lot of people are saying. So why are you kicking off with the Wall Street story? Well, here's the audience direct version. If you use ChatGPT, Claude, Gemini, Copilot, all these different tools, NVIDIA's data center line is the most reliable read in the industry on whether the tools you use get faster and cheaper, or whether you start running into rate limits and price hikes. $75 billion of data center revenue in one quarter, that is the AI infrastructure build out in a single number. More compute is being installed right now than any previous moment in computing history, period. If you have NVIDIA in your portfolio directly or through maybe an S&P 500 index fund in your 401k, which is probably almost everyone at this point, the company representing your single largest passive AI exposure just got its best quarter ever. The 2% overnight dip is a story the Wall Street's going to cover, but cover the rest of it and keep in mind that this is not slowing down anytime soon. So a practical nudge for you, if you've been waiting to know whether the AI tools at your job will keep getting better and better, well, the answer is in the data center line. $75 billion sold by NVIDIA in one quarter, up roughly double from a year ago. The infrastructure story is real, it's shipping, and it's being paid for. The bottom line here, the biggest revenue quarter in the history of chip making. It got praised, it got beat, and the CEO says agentic AI is here to stay. And I tend to believe him on that one. That's the receipt. All right, let's go ahead and get into our rundown. Yesterday morning in Mountain View, California, Intuit, the company behind TurboTax, QuickBooks, MailChimp, Credit Karma, announced it is cutting approximately 3,000 employees. That is 17% of its global workforce. This one coming from TechCrunch, Seeking Alpha, Chords, Yahoo Finance, and Bazinga as well. Intuit CEO framed the cut as, quote, simplifying corporate structure to accelerate AI integration, end quote. Same song, different verse. Severance, 16 weeks base pay, plus 2 additional weeks for every year of service. Last day on payroll, June 31st. And here's the part that lands for me, right? So, per the same reporting, Intuit has signed multi-year AI partnerships with OpenAI, with Anthropic, and a lot of other companies. Those partnerships embed Intuit's services directly into ChatGPT and possibly into Claude. So, the 3,000 people building TurboTax, QuickBooks, and Credit Karma are being replaced by 2 AI vendors that will sit inside the apps you already pay a subscription to use. To make that make sense, the company that does your taxes just chose its AI partners over the people who build the actual product. If TurboTax or QuickBooks is part of your tax season or maybe even your side hustle, who knows, the product you open next April is going to maybe look a little bit different. The humans who built it are leaving by July 31st, and the AI vendors are already coming inside the doors. This is the layoff story for an audience that does not work in tech. The brand is on your laptop already. And if you do work in tech, again, same song, different verse. Our second story in the rundown. This one has the same thought line here. Yesterday morning, approximately 8,000 Meta employees received layoff notifications. Singapore got the emails first at 4 a.m. local, then the UK, then the US as the people's mornings began. Meta asked all of North America to work from home that day. We previewed this layoff across a bunch of different episodes, and yesterday it finally landed. 2 new details worth your time here. One, internally, employees built at least 3 countdown websites in the weeks leading up to it. One of them carried the header, quote, the big, beautiful layoff. 2, per the same reporting, 7,000 other Meta employees are being redirected into newly created AI teams. Teams named Applied AI Engineering, Agentic Transform Accelerator, Central Analytics. Kind of fancy names if you think about it. So the headline number is 8,000 cut. The bigger number is closer to 15,000 when you count the 6,000 open roles that had been canceled. And 7,000 of the people still standing are being reassigned to AI work. If you work at a Fortune 500 company that announced an AI restructuring this year, this is the playbook that they're going to run: cut, cancel, reassign. Now, London, the same morning, Bank of Standard Chartered CEO Bill Winters announced his own AI workforce plan to cut more than 15% of the bank's 52,000 support staff by 2030 through, get it, AI adoption. And in announcing it, Winters described the strategy as, quote, replacing low-value human capital with financial capital and investment capital, end quote. Low-value human capital. Interesting take there. To read that back, the bank CEO described his employees as lower-value human capital into an actual microphone. The reaction was immediate. The former president of Singapore wrote a public Facebook post calling the language, quote, disturbing and demeaning, end quote. By yesterday morning, Winters had sent a company-wide damage control memo to staff, saying the comments may be unsettling when, quote, reduced to simple headlines or a quote out of context, end quote. He did not retract the strategy. The 15% cuts by 2030 still stand. So here is the so what between both these stories, between Meta and this story. Yesterday morning at Meta, 8,000 people lost their jobs to AI restructuring. Yesterday morning in London, a bank CEO described his soon-to-be laid-off colleagues as lower-value human capital. The phrase Winters uses what every worker has suspected their executives actually think. It would never say out loud, and he just happened to say so. So now we know. All right, our third story in the rundown. Again, this one coming yesterday afternoon after the close. SpaceX filed its IPO prospectus to the SEC, ticker SPCX, listing on NASDAQ and the new NASDAQ Texas Exchange. Per TechCrunch, Bloomberg, Fortune, and The Street, the company plans to raise up to $75 billion, targeting a valuation north of $2 trillion. Put that into context, the previous record IPO was Saudi Aramco at $29.4 billion. We covered that one before. SpaceX wants to raise more than twice that amount. A few prospectus details that matter for this audience. Starlink, SpaceX's satellite internet business accounts for more than two-thirds of the total revenue. It earned $1.2 billion in profit last quarter alone. SpaceX as a whole lost $4.27 billion in the same quarter, up from $528 million lost a year ago. Accumulated deficit through Q1, $41.3 billion, if you can believe it. And they want to raise for an IPO. Musk retains 85.1% of the voting power post IPO. Shocker. And per TechCrunch's read of the prospectus, the document is, quote, filled with AI bets, satellite-based AI inferences, Starlink data being licensed for model training. SpaceX is positioning Starlink as the connectivity layer of AI everywhere, pricing as early as June 11th. Even if you never buy a single share of SpaceX, a $2 trillion IPO reshuffles every S&P 500 index fund. If you have a 401k, this story will eventually touch your portfolio, and I can almost guarantee it. All right. If you're enjoying Morning Intelligence, do me a quick favor this morning and share this episode with at least one of your friends, maybe a family member, maybe a coworker. Go ahead and share this episode with them. They get a little bit smarter. You look awesome, and you help the show grow alongside it. So I appreciate it. Please feel free to share it with them. Send them a text message, email, LinkedIn, DM, whatever, however you want to get a hold of folks. Would greatly appreciate it. Thank you so much. All right, let's go ahead and get today's deep cut. Yesterday, we said workers are using AI more and trusting it less. Today, one more reason why. Per Bloomberg, the Next Web, and CBS News, a new study from a group called Forum AI ran a controlled accuracy test on 4 most used chatbots. Think your ChatGPTs, your Geminis, your Claudes, and your Groks. Methodology? They asked each of them more than 3,100 questions across news topics like politics, healthcare, and foreign affairs. Then they scored every answer on basically 3 axes here: accuracy, bias, and source selection. Was the chatbot using credible sources or pulling from low quality outlets? Across all topics, the results were actually mixed. The chatbots performed okay in healthcare, acceptable in foreign affairs, and on election related questions specifically, they failed on at least one of 3 axes 90% of the time. 9 out of 10 times wrong on accuracy or bias in the framing or pulling sources you probably would never trust, like your Reddits or your various chat rooms across the internet. To read that back, the same AI tools you use for work emails, meeting prep, and quick research are wrong about other things 9 out of 10 times. And this is the timing point. We are 6 months from November 26 midterms. AI chatbot usage is at an all-time high. ChatGPT alone has more than 900 million weekly active users per OpenAI's own disclosures. A lot of them are asking, political questions along the way. So this story tells us 9 out of 10 times they're getting the answers unreliably from these tools, at least when it comes to political questions. So why is it worth your time? Well, here's what this is and here's what's not. This is not AI is broken, don't use it for any political purposes. I think you should use it. Your boss is using it for sure. The deck for tomorrow's meeting is probably being written by it right now. So what is this? Well, it's the version of AI you have on your phone, and it's brilliant at writing copy, generating tables, translating paragraphs, maybe even summarizing things for things later in your day. But it's bad at very specific questions at who said what on the campaign trail last Tuesday. So what do you have to do? Use your head. Make sure you're reviewing what AI is spitting back at you. Make sure that you're taking a critical eye at whatever you're using AI for, or whatever the outputs it gets giving back to you. Then and only then will you know whether it's accurate or not. So a practical nudge here: next time you ask ChatGPT, Claude, or Gemini about a candidate, a ballot measure, or anything policy related, double check it. It's just that simple. Treat it the way you would treat a Wikipedia answer you need to put in a board memo. Verify with at least one primary source, possibly 2, ideally 3. Use AI for the parts that it does well. Be a little annoying about the parts that it doesn't do well, and be very critical about it. Your AI is getting smarter at almost everything except the part that decides who actually runs the country and to what degree. That is the gap worth knowing. So again, the takeaway here: use the tool for what it does best. Verify the part that decides things like foreign policy, and make sure that you're keeping track of this stuff. That is the most honest scoreboard I think we should be tracking for ourselves internally moving forward. All right, before we leave today, one more story from yesterday, and I was watching the Jeff Bezos sit down, and I thought it was rather interesting, so I want to bring this one into play. Jeff Bezos sat down with Andrew Ross Sorkin on CNBC's Squawk Box yesterday morning. Sorkin asked him about the AI bubble, and here's Bezos' direct answer. Quote, even if it does turn out to be a bubble, you shouldn't worry about it because the bubble is driving investment, and a lot of the investment is going to turn out to be very healthy, end quote. Okay. He compared it to the biotech bubbles of the 1990s. A lot of investors lost a lot of money, he said, but we still got to keep all the life saving drugs. So here is where we are with this. Nvidia just reported the biggest revenue quarter in history for semiconductors, and Intuit is cutting 3,000 jobs. And Meta sent 8,000 layoff emails as well. A bank CEO called his workers low value human capital. SpaceX filed for a $2 trillion IPO. And one of the world's richest men went on television to tell you, don't worry about it. Yeah, roll the credits on that one. For tomorrow, tomorrow's Friday, which means if we have our Friday show. Obviously, on the list, the AI trade going on the weekend, Nvidia, the broader chip complex where the money is moving, any movement on the Anthropic $900 billion fund. We're also tracking whether OpenAI actually does file for their IPO before the end of the week. Who knows? But again, if anything does transpire, we'll make sure to cover it tomorrow. And that's your morning intelligence for Thursday, May 21st, 2026. If you like what you heard, hit subscribe from wherever you're listening. Send this episode to that one friend who keeps asking you, hey, what's going on in the world of AI? Do you know who they are? I'm Don Michalik. Thank you so much for listening and have a great rest of your Thursday.